OpenAI is pulling in $12 billion in revenue, yet they are on track to lose $14 billion this year. Investors do not just accept that, they expect it. Billions are flowing in, even more are burning out, and every major AI company is playing the same high-stakes game. Is this brilliance or the start of tech's next colossal bubble? Here is the paradox reshaping everything you thought you knew about the industry. ChatGPT subscriptions make up the backbone of OpenAI's revenue stream. The entry-level Plus tier costs $20 a month. Pro users pay $200 a month. For larger organizations, there is ChatGPT Enterprise with custom pricing and long-term contracts. On top of subscriptions, developers and startups pay for API access, and every call to OpenAI's models racks up fees, driving about a fifth of total revenue. In the first half of 2025, these combined sources generated $4.3 billion, and the company is now running at a pace that could reach $12 to $13 billion by year's end. Despite that, most users are still on the free tier, and even among paying customers, the margins are squeezed by the cost of running these powerful models. Enterprise deals bring in the largest checks, but they also demand the highest performance guarantees. The result is revenue is surging, but the math is not simple. Every dollar in requires massive infrastructure behind it. That sets up the next question. Where does all that money go? Most of OpenAI's revenue disappears instantly into the machinery needed to power and improve its models. The single biggest drain is compute. A single high-end GPU costs between $30,000 and $50,000, and training the next major model, like GPT-5, can burn through more than $100 million in one run. Keeping ChatGPT running for hundreds of millions of users is not cheap either. Inference, or generating answers for users, racks up over $1 billion per year on its own. Research and development is the next black hole. In just the first half of 2025, OpenAI spent $6.7 billion on research and development, much of it on experiments that will never make it to production. Safety research, failed model runs, and moonshot projects eat up nearly 3/4 of every dollar earned. Research drives costs that often never return revenue. Then there is talent. With over 700 employees, average compensation hovers around $400,000. But top researchers and engineers can command salaries from $500,000 to $2 million. These are not luxuries. They are the baseline cost to play in the AI frontier. The entire business is built on the assumption that this spending will eventually pay off. But for now, every month is a race against the burn rate. OpenAI's roadmap is built around a series of ambitious milestones, each more aggressive than the last. In 2025, the company expects to bring in up to $13 billion in revenue. But that comes with a projected loss as high as $14 billion. The following year, losses are expected to hold steady or even rise as infrastructure build-out continues, and the company pushes to scale faster than its rivals. By 2028, internal forecasts show cumulative losses reaching $44 billion. The real turning point, at least on paper, arrives in 2029, when OpenAI projects a leap to $100 billion in annual revenue and its first profit, $14 billion in the black, if everything goes according to plan. That means betting tens of billions over the next 4 years, with each target date for profitability drifting further away every time the numbers are revised. The math only works if exponential growth keeps outpacing the burn. Google is pouring more than $50 billion a year into AI, ramping up data centers and custom chips to keep its Gemini models ahead. Microsoft's annual spend has crossed $60 billion, combining its Azure investments with its multi-billion-dollar OpenAI partnership. Meta's push is even more aggressive, up to $80 billion this year alone, with Mark Zuckerberg betting on hundreds of thousands of NVIDIA graphics processing units to drive Llama and Meta AI. Anthropic, though smaller, is burning over $2 billion a year, with Amazon and Google backing its Claude models. Elon Musk's xAI has raised $6 billion just to try to catch up, funneling nearly all of it into hardware and training. Every one of these companies is losing money on AI, but none can afford to slow down. If any player hesitates, they risk falling behind for good. The only way to stay in the race is to spend more and faster than everyone else. This is a high-stakes race for dominance. Investors in OpenAI are not just tolerating billions in annual losses. They are following a playbook that already created some of the world's most valuable companies. Amazon spent 2 decades in the red, plowing every dollar into logistics and cloud infrastructure. The payoff was a valuation of $2 trillion and dominance over e-commerce and web services. Tesla burned through billions on factories and batteries before ever posting a profit, then rewrote the auto industry's rules. Netflix piled on debt to license and produce content, outlasting Blockbuster and capturing global streaming. But not every big spending bet pays off. WeWork raised billions chasing rapid growth, only to collapse under its own hype. Pets.com and Quibi spent heavily on marketing and technology, but never found a sustainable business. The difference between building the next Amazon and burning out like WeWork comes down to whether the spending actually builds a lasting advantage. OpenAI now carries a $500 billion valuation, despite annual losses that would sink most companies. The bet is clear. If revenue hits $100 billion by 2029, early investors could see returns on par with Amazon or Tesla. If growth stalls or costs stay high, that sky-high price tag becomes a warning sign. For users, cheap AI tools depend on this gamble. If it fails, prices spike or services vanish. Microsoft's deep pockets provide a safety net, but even that has limits. The stakes are massive, and no outcome is guaranteed. Right now, trillion-dollar bets keep your AI tools cheap. If this gamble fails, prices surge or vanish. The future of technology hangs on a profit that hasn't arrived yet. What's your bet?